Hi, friends. This is Steve at newcompasscrypto.com. Thank you for joining us as we talk about what the Federal Reserve is expected to do tomorrow, what's expected to do over the coming months, and what that means for the price of Bitcoin. So to recap, the Fed has raised rates over 5 times this year. And right now we are at a U.S. federal funds rate of 3.25%. We started the year at a federal funds rate of 0%. And so these are historic rate hikes in this period of time. So right now we're at 3.25%. Tomorrow, they're expected to raise rates 75 basis points, taking us to 4. And now this is where things get interesting. What is going to happen in December and what is going to happen next year? So economists are somewhat mixed. I want to show you this chart because it shows what economists thought was going to happen just 6 weeks ago. This was done, this was a survey of economists on September 9th through the 14th. They thought that we were going to see a 75 basis point hike in September, and then only a half point move in November. That is now already proven to be wrong. Now, what's also interesting about this, as you can see going on into 2023 and into 2024, they thought that the terminal rate, meaning the rate at which the Fed is going to get to before they pause or reverse rate hikes, was never really going to get above 4%. So it was going to stay at 4% through all of 2023, through most of 2024, and then begin to come down. And by mid-2024, it was going to be at 3%. But now that has all gone out the window. Where are we right now? We are at 3.25%, and everyone's guessing where is going to be the federal funds terminal rate. Well, on Wednesday, they're going to raise 75 basis points. That's going to get us to 4. And even the best case scenario has them going and raising another 50 basis points in December before pausing. So no raise in January and getting us to 4.5%. So even in the best case scenario, we're already 50 basis points above where economists thought that the Fed was going to stop just 6 weeks ago. If this happens, the stock market is going to take off, Bitcoin is going to take off, but that is not the most likely scenario. The most likely scenario is that currently we're at 3.25, Wednesday we're at 75 basis points, get us to 4, and in December that we're going to be raising another 50 basis points, and then in January another 25 basis points before we pause. That's going to get us to a terminal rate of 4.75%. And that is not even the worst case scenario. The worst case scenario is that we start at 3.5, tomorrow they raise 75, December they're going to raise, they could raise another 75 if inflation does not come down. And then in January, they might have to raise another 25 to 50 basis points. And that would get us to a terminal rate of between 5 and 5.5% before they pause and look around and see how it's affecting the economy. Now, this is what's interesting. If the worst case scenario right down here at the bottom would certainly send the US economy into a recession, and it would send the S&P from where it is right now, the S&P 500, from 3,850, probably down into 3,000. It would send Bitcoin down to 15,000. Now, I don't believe that this is going to happen, the worst case scenario. So let's talk about the most likely scenario. The most likely scenario is that we're going to end up with a federal funds terminal rate of 4.75%. Well, what does that mean? For us, it means that the S&P, I believe, is going to stay somewhere between 3,600 or 3,500 and 4,100. It's going to be choppy. And I believe that Bitcoin is going to remain choppy, anywhere from 18 to 25, 26, 27. So forecasting into what's going to happen moving forward, I like to use this model. So this is called the Bitcoin Waves model. This is the fourth wave model. Now, all of these models, you can go to a variety of places. So many websites are going to offer you price predictions moving forward. But I think what's important for all of you is you want to look at a model that has been historically fairly correct and also one that aligns with the changing macro forces. And this one has done a fairly decent job. Now, it thought, if you look at the very top line here, this fourth wave model, it thought that Bitcoin was going to go above 90,000 in 2021. It didn't. It got to this second line right here. It got to above 60,000. But even in the second line, it only thought that in 2023, it was going to come back down to only just about 35,000. That was the low before going well back up into 62, 63, over 70,000. The third line down here had Bitcoin going down to the high 30s, then getting back up to 62,000. The line that I like to look at that I think has been the most accurate has been this line down here at the bottom. Now, this was the least likely scenario a year ago, but it's actually the most likely scenario now. It has Bitcoin. It had a low going under 20. And in fact, that's what happened. Bitcoin went down to 17.5. And now prices moving forward are only going to be, see, the high in 2023 is going to be somewhere around 37,000. It's going to be choppy. It's going to come down to a low of about 25,000 in late 2023 before heading into this bull run right here and going to above 40,000 in 2024. That, I believe, is the most likely scenario. We're going to be in those ranges for the rest of this year and for next year. I believe that tomorrow, Chairman Powell is not going to say, hey, everyone, we're pausing, we're going to take a break, and we're going to see what's going to happen. I don't believe he's going to do that because the unemployment rate is still very low, 3.5%. In order for them to pause, unemployment is going to have to be at around 4%. A jobs opening report came out this morning, and it had an increase of 1 million new jobs that were available. That means that the labor market is going to remain incredibly tight. And a CPI report is going to come out, and unless it shows that inflation has come down into the 5s or even the mid-6s, that the Fed is not going to show any sign of pausing, and it is not going to indicate that it is going to pause. So this means that they're probably going to raise rates, 75 tomorrow, then 50 in December, 25 in January, and then they might stop and look around. So the stock market is not going to go on an extended bull run, I don't believe, between now and the end of the year. I don't believe Bitcoin is going to go on an extended bull run. I believe that for the next several weeks and months, Bitcoin is going to remain between 20 and 23. And for us, that means that we are going to have to get in when prices are low and sell when prices are high over and over and over. Otherwise, the buy and hold model is simply going to have us be at where we are right now or below where we are right now 6 months from now. Those are the strategies we use at New Compass Crypto. Thank you for joining us today as we talked about our predictions. As always, our videos get posted to our YouTube channel and also to our website, newcompasscrypto.com. If you go to our YouTube channel, please like and subscribe. Thank you for joining us. Take good care. Bye-bye.